Money Day, guys and girls, you're now locked in and learning with Vel. So I want to give you guys my Learn with Vel strategy, which will provide you between a 70 to a 95% accuracy. Now, in the process of that being said, this is going to teach you guys to become more patient and also to become more profitable. But the most important thing the strategy will give you guys is to help you become more precise. Now, with that being said, I'm going to try to show you this strategy as quick as I can. Of course, some things can't be rushed. Greatness definitely can't be rushed. But what I want to do is tell you guys pretty much the basis of what this strategy is. Okay, now this strategy is based around session opening times. So in this case, I'm looking at GBP USD. So I'm going to be trading the London session and the New York session openings. Okay, those are going to be the times that I'm going to pay attention to. So to make it very clear for you guys, this strategy is going to require a purple box, a horizontal line, a buy position or a sell position, and a Fibonacci. That is it. It's not really going to require much, okay? The first thing we want to do, guys, is we want to highlight a candle. So we're going to highlight a candle like so. Once we highlight this candle, we're going to use the Fibonacci tool and we're going to measure from wick to wick, okay? Once we measure wick to wick, we're going to highlight 50% of this candle with our horizontal ray, okay? And then we want to make sure that the horizontal ray is the same color as our 50%. Once we've done that, we can now remove the Fibonacci so that all we can see is the purple box, which we can extend to the right, and the 50%. Now pay attention, guys. If price moves up, okay, let's go back for a second here. This candle, I don't care what it is. If it's a bullish, if it's a bearish candle, it's irrelevant. What we're paying attention to is what happens after this candle closes. So after this candle closes, if price moves up 40 pips or more, guys, I'm saying to you that there is a very high probability that when price comes back down, it is going to go long. Okay, and on the flip side, if price comes down 40 pips or more, I'm saying to you that when price retraces back upwards, there is a high possibility that price is going to go down. Retail traders are always trading the direction the trend is. When the trend is bullish, they're buying. When it's bearish, they're selling. Okay. We're doing the opposite. When price is coming down, we're preparing to buy, and when price is going up, we're preparing to sell. Okay. So, in a nutshell, what we're going to look for here in live time, because it's always best to show you guys in live time, is we're going to look for price moving away from this candle, okay? And once price moves away, we are going to ascertain if it's moved more than 40 pips. If it has, then we are going to be waiting for price to come back down into an area where we're going to buy from. So if we're looking to buy, we're going to buy off of the top of this zonal box and 50%. Now, usually this zonal box is meant to represent a candle, right? So I would be buying from the wick, the top of the wick, which I call a head, okay? So I would buy from the head and I would buy from 50%, okay? If price was coming down, then if price pushed back up, I would call the low of the candle, the wick. I would call the wick, I would call it the foot. So we'd be selling off of the foot and 50%, okay? So to give you guys an example of what I mean and what I'm looking for, I will mark out a candle for you guys right now. Now, down here we have the London session opening. Okay, now it's pretty handy when you use the magnetic tool because all it simply does is it selects the high and the low for you so that you don't have to worry about zooming into the chart to be accurate. Okay, now that we've done that, I am going to use the magnetic tool only for the top and then deselect it so I can accurately latch on to the bottom of this candle. And now I've got 50% with my Fibonacci, and I'm going to highlight that with my horizontal ray so that I can remove the Fibonacci. Now that I've done that, guys, what I'm looking for is for price to move up more than 40 pips or down. I don't care what this candle is here. This candle is irrelevant. This candle is bullish, right? But it could be bearish. It doesn't make a difference, okay? What we want to notice is what happens after this candle closes. Now, if you don't know, you should know that the close of a bullish candle is above, okay, right up here above. So therefore, when price pushes up, we can see here that the next candle, they're all bullish, right? I know they're red, but they're bullish, okay? We can see that price pushes up. So it's very clear to see that, you know, after the session candle opens, price doesn't come down, it just goes up, and we can clearly see it pushes up more than 40 pips, but it's yet to retrace. So what we are saying is when price does come down, guys, there's two areas we would be buying from. One would be the head of the candle, okay? Now, I always like to risk 35 pips when it comes to Forex pairs, okay? 35 pips, that is me, okay? 35 pips for Forex pairs, nothing more, okay? 35 pips as a maximum. Depending on what pair you're trading, of course, you might need 35 pips might be too big. If you're trading Euro USD, 35 pips is like 50, you know, it's probably not needed. But for this strategy, it only works off of the 1 hour time frame because we're marking the 8 a.m. candle and the 1 p.m. candle. Therefore, we're going to make sure that we cover the session candle. That's number one. Okay. And in this case, we can see, you know, we very clearly cover this candle, you know, by maybe 4 or 5 lengths, but we want to give price space to breathe. That is also another thing here that I want to highlight to you guys. Giving price space to breathe. Sometimes what you'll see is price will come down and it'll react, and that'll be the perfect entry. That'll be the sniper entry everyone talks about, right? But sometimes price comes down really deep and then it does that. So for the fact that price can drop deeper into this area, we want to make sure that our stop loss is not too tight, just in case price does tap us like this and goes up. You know, we want to give price space to breathe, but nothing more than 35 pips, guys. And the reason being is because we're not in this to gamble. Okay, we're taking a calculated, or it's a real calculated move that we're taking here, and that's based off of the fact that we're using historical data, or I've used historical data to understand just how effective this strategy is. I've sat down and gone back and spent 7 hours, guys, 7 hours in one single sitting back testing this strategy. So when I tell you guys it works, it fucking works. Okay, so we're gonna wait for price to come down. And what we should be doing is we should mark out every session candle here. We should mark out the London, which we have. The next one would be the New York one, which would be right here. I'm going to put the magnetic tool on again just to make it easier for me so I don't have to squint. And we're going to measure from wick to wick. Wick to wick, we move it across to the right. Okay. Now, we can see again, guys, if we measure from the close of the bullish candle, price has pushed up more than 40 pips here, and it's yet to pull back down. So I'm not going to continue marking up anymore because we can see that price is just continuously going higher and higher and higher. Okay. I think we do get a candle here, but does price come back down? Let's see. In this instance here, where did I just find that candle? 8 a.m. candle right here. Okay. We've got a London session candle. In this case now, okay, price, where does a bearish candle close? Where's the close of a bearish candle, guys? The close of a bearish candle is below. So we're not going to measure from the top. Okay, we're going to measure from the bottom this time, right here. And when we use the magnetic tool, it's going to latch on to the bottom straight away. Okay, so we can see price comes down here 18 pips, and it very clearly, okay, very clearly, guys, pushes up more than 40 pips. Okay. So what we've noticed and what we should be waiting for is for a pullback now, because what we've understood is that price has moved more than the average. The average GBP moves is around 30 pips. So because we've now said, cool, price has moved more than 30 pips, it's moved more than 40, excuse me. That is basically a combination of us saying, hey, price has moved more than the average here. It's most likely showing us that this is the direction it wants to go in. Okay, so we take 2 entries. Now remember, guys, we want to find 50% of this candle. So I measure from the head of the candle, I remove the magnetic tool so I can accurately latch onto the bottom of the candle. And then I'm going to highlight 50%. Okay. I make sure 50% is accurate. And guys, pay attention to detail. This is one of the only few jobs in the world that if you make a mistake, you can get punished straight away. So it's really important, guys, to pay attention to the detail. Okay, but out of the 2 positions that we would add, we add one off of the head of the candle, which is right here. Okay, and then we add a second. Let's just make this easier. 350, and let's say 1050. Okay, those are going to be, that's going to make it a 3-to-1 R&R. I'm just going to save this, learn with Vel. Okay, so now what we can see is this is how much we would be risking. Okay, 35 pips. It covers this session here by a mile. Okay, and we also now want to have another entry, don't we? One on the 50% line. So we would have one right here. Now, on the flip side to this, guys, we now know that if we're risking 35 pips per trade, that means if you guys are following this, which you should be, but if you're not, here you are, you should always risk 1% per trade. Okay, whatever percentage you're risking each trade, that's spread across the amount of pips your stop loss is. So if you want to risk 5%, for example, per trade, and you're risking 25 pips, and that means 25 pips equals 5%, which means you only now need to catch 25 pips to be up 5%, right? So in this case, we're risking 1% per trade. Okay, when price goes up 35 pips, that means we're now 1% in profit. When price goes up 70 pips, we're now 2% in profit. So I always like to have a minimum risk to reward of 3-to-1 at the very minimum. If I don't look at a trade, if I look at a trade and I don't think I can get a minimum 3-to-1 R&R, I won't get into it. Whether that means me either adjusting my SL so that I can get a larger return, or if that just means me sitting on the sidelines to say, hey, I don't think the move is going to be as favorable, let me sit this one out. That is a-okay, guys. You don't have to take every single trade, but with this strategy, what it's going to show you is that you are going to find multiple entries. You are going to find hundreds of entries. And in actual fact, I could have told you guys at the start of this that you could mark out every session. You could mark out the New York, the London, the Tokyo, the Sydney. But all that would really do, guys, is just give you more trading opportunities. And the more opportunities means the more risk. So what do? I like to just keep it 2 sessions per each pair. I'm looking at the London session and the New York session. If I was looking at Euro USD, I'd look at the Frankfurt Open. Okay, I'd look at the European Open and I'd look at the New York Open. I wouldn't be looking at the London Open and the Aussie Open, because then it just gets to too much, guys. Too much headache, too much opportunities, too much things to go wrong. We keep it simple. Sometimes it means we have to be more patient, like I told you guys at the start of this video, but we also become more precise. That is the key golden nugget here, guys. We become more precise. So my message to you guys is when you are up 35 pips in profit, you are going to move your stop loss to break even. Okay? You're going to move your stop loss to break even. And the reason why you're going to do that, ladies and gentlemen, is because that is going to give you guys the opportunity to go risk-free. Okay? Meaning if price decides to come back down, you're not going to incur any losses. Okay? Now in this case here, when price came down and it tapped into this here, you can see here, guys, it came down, it tapped into the 50%. Okay? And it also played off of the head of this candle. It done that and then it pushed away. The rest was history, guys. The rest was really and truly history. If you jumped into that trade, boy, price is giving you 270 pips there. Times that by 2, you guys can see this would have been a really big profitable move. I'm not saying you would have kept your 1% all the way up, because you wouldn't have. You would have taken profit at TP1, at TP2, at TP3, you would have taken profit. And whether you guys had a TP4 or not, that's debatable, okay? But if you didn't, maybe you just wanted to, move your stop loss into profit rather than it being risk even. And now that your stop loss is above your entry, you're just allowing price to play out and do what it wants to do after you've taken a considerable amount of profits out of that trade. That's also fine. But what we can see is if we had taken this trade, guys, this would have been a perfect trade. I'm going to tell you this, guys. They're not all perfect. Trades are not always as perfect as what they are like this. But this is the benefits of having a strategy that can give you a 70 to 95% accuracy. I said it, a 70% to 95% accuracy. You're going to become more accurate by the less trades you take. Okay? If you're trading every session, the 4 trading sessions, you're marking those up, then it just means you're exposing yourselves to more risk. But based on how I trade this strategy, I only trade 2 sessions, and that's how I'm able to have such a high success rate. Okay? So we're going to move over. We can see price comes down and it plays into this candle, and eventually, it comes down and it plays lower. Nothing lasts forever, right? Nothing lasts forever. We're already out of this trade because price has gone up and done amazing. So we're not going to look at that. What we are going to look at is where we currently are right now, because we do want to get into some type of trades. Okay. So I'm going to press play and see how this plays out. Let's see when we can get another candle. Okay, I'm going to stop it here. What's this one? 7 a.m. Okay. So this is what's going to happen, guys. Let's just say this is live time right now. Okay. What you're going to do is you're going to look to find the most recent session candle. In this case, this is the most recent one. Once we find the session candle, guys, we mark it out. Okay. Once we've marked it, we're going to move this across to the right. We're going to find 50% of the candle. Okay. Now that we've found 50%, we're going to highlight 50% with the horizontal ray. Okay. And then we're going to remove the Fibonacci. Now that we've done that, we can just set and forget. Okay. Now, if you guys, want to be smarter with your time, then you could just use the pip stick, the measure stick, to go up, and you could measure 40 pips, which is here. And you could say, cool, I'm going to set a price alert right here. Set a price alert here so that if price moves, if price comes up 40 pips, I can set an alert to say, hey, price has hit my target. Pay attention now for a pullback. Vice versa. Okay, the close of a bullish candle is above, so we're going to measure from above, and we're going to come down and we're going to say 40 pips is here. So again, we could set an alert right here, and that alert, we can edit the alert to say, hey, price has moved down 40 pips. All that is saying to us is, hey, price has potentially just reached our criteria here. Let's pay attention to what it's going to do now. Sometimes price may pull back and give us a good entry. Sometimes it may not. That's part and parcel of the game. So in this instance, guys, we want to wait for price to either go above the blue line or below. We're not just going to jump into the trade. We're going to wait for price to move above or below. Now, we know this blue line represents 40 pips or more. So our alarm would have gone ringing off. Now we'd have been paying attention. A lot of you guys get FOMO, and what happens is you see price moving in a direction. You feel like you're not going to catch the trade, so you jump onto a moving train. That is the most ludicrous, craziest thing you could ever do. For those of you who have worked a 9 to 5 or just traveled on a train before, if you went to the train station and you missed your train and you was going to be late to somewhere, would you jump on the back of the train whilst it was moving? Or would you wait for the next train to come in 15 to 20 minutes time? I hope most of you said you'd wait for the next train to come. And the reason why you wouldn't move on to a moving train is because it's dangerous, guys. It's flipping dangerous. So with that being said, how I'm teaching you guys is the exact same patience that you guys need to exercise here. You need to be able to take your time and understand that even though that train is just missed, that train is just gone, there is the next one on the way. Okay. And in this case, price is pushed up, right? Price is pushed up, and actually our alerts have been hit. So now we're waiting for what? A pullback. That's right, guys. We are waiting for a pullback. So if price pulls back, fantastic. If it doesn't, then that's the name of the game. Okay. But if it does pull back, we're looking to buy from two places, guys. One being here, which is the head of the candle. Okay. We're going to change this here to learn with Vel. Why is it not changing? Perfect. Okay. We're going to clone this one, move it here to 50%. This one, we're going to make it smaller. Make this one smaller. Okay. Cool. So we've got two entries where we would be taking a trade if price does come down. Okay. All we can do now is be patient, guys, and pay attention. Again, we can set another alert below, right above here. We can even set a buy limit, guys, for those of you who don't have the time and being able to look at the charts. Now, look, we're really close to the entry right now, guys. We are really close. So I'm going to get ready to enter a trade. Okay. Price has come down very quickly. It's tapped the 50%, and it's also tapped it's tapped the 50% and the head of the candle. Okay, so I'm going to enter position here. I'm going to enter a one lot position. I'm going to press buy, and the SL is going to be how many pips, guys? You guessed it, 35 pips. So we're going to have a 35 pip SL. And then the take profit can also be 105. Okay? That would be our 3-to-1 R&R. Okay? Now, price has come down. And really I need to have another entry right on the edge here. So hopefully it pushes up a tiny bit so we can get into a trade. Let's see what it does. Okay, I'm going to just enter another one there slightly above our entry, but because this is a replay feature, I'm not sure if price is going to, you know, stop right on the purple line for us. So we're going to add another position here. And then again, SL 35, not 36, not 37, 35 maximum. Okay? And now we play it out. Now, naturally, guys, what we can see happening right here is we've already hit TP1 and 2, right? It's come up and given us 88 pips. So we've already hit TP1 and we've hit TP2. If we have a look at our positions, we're already up over $1,000 in profit. So if I wanted to close these trades right now, we're looking at $1,200 here just from highlighting a purple box, an orange line, and using the Fibonacci tool. We're not using much here. We're not waiting for price action. A lot of people talk about ICT concept, this and that, and sometimes people can get it wrong because everyone's interpretation is different. Well, this is really fucking simple. You ain't got to be a rocket scientist to figure out that you highlight the candle of the selected time zone, which is in this case going to be the London and the New York session candle, and you wait. That is it. That is the biggest secret. You wait. Okay? So price is pushed up and it's most likely probably going to take out these areas here above these highs. So we've got two positions open. One is going to stop at 3-to-1 R&R. Probably going to tap us out. Let's have a look, see how it plays out. We can probably speed it up a bit more unless we get another entry. Okay, perfect, 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 perfect. Now, guys, this is a great example to show you that if price, in this case, what would have happened is this, right? Price is pushed up, it's giving you 88 pips, which means it's 2.5% return, yeah? It means that your TP1 would have been hit, so that trade would have been closed. Your TP2 would have been hit, so that trade would have been closed. And you only would have had your TP3 open, which would have been risk at the very minimum break even. Okay? For the purpose of this video, I'm not going to do that. I don't want to waste your time showing you guys that we can make nothing on trades breaking even. We're going to go hard or go home. We're going to go SL or TP. That is always going to be. But if it was you guys at home and you guys have got, you know, a few $1,000s on the table, I'd hope you guys would take that money off the table and, of course, you know, wait for another entry. So in this case, what I want to tell you is if you do happen to close both your trades or all trades because price has come against you and it's hit you at a break even, or you've got a stop profit, as long as price does not break the structure of the trade, you're going to re-enter. Okay? So what I mean by that, as long as price does not come down and close beneath this purple zone, okay, we're going to re-enter the trade. So I'm going to enter another position right now from where it is. And of course, that does, you know, mean potentially that price, I'm not going to know yet if price is going to close beneath the zone or not. So it is the risk that you do have to take, guys. But nonetheless, I'm going to take the risk because I like price action. I like what we're seeing in here. So let's see how price plays out. Okay, we get a nice reaction. I'm going to speed it up a bit. It's moving too slow. Do we get another reaction? Or does price just go? Okay, now already, guys, again, you know, price has come up here. Look at that, 78 pips. So from another entry you've had here, you've already had TP1, TP2 hit again. Okay, we've already seen that. So now we've had, you know, 1, 2, 3. Let's say we've had 3 trades here that have hit TP2. Okay, 3 trades have all hit TP2 twice for the second time now, guys. Let's play it out again. Price comes down. So now I'm going to enter 2 more positions. Okay. 1 here, and just in case price doesn't come down to 50%, for the purpose of not making this recording a fail, I'm just going to add the position here. Okay, like I said, guys, I'm not doing this whole break even stuff. I'm doing what am I doing? TP or SL, that's what I'm doing. Okay, TP or SL. Now what I can do is I can add another position here. I only added one. I'm going to add one more. And that position that I add, I'm going to say SL, 35 pips. And I'm going to say the TP. I'm going to take TP at TP2, 70 pips. Okay. So let's play it out. Let's see what happens. Aha. Now look what's happened, guys. We have been unfortunate. Okay. Price has come down. It's closed us out. And in actual fact, we've had 1, 2, 3, 4. We've had 4 trades now hit our stop loss. But we've all lost $350 a piece. Now, let me break this down to you guys, yeah? 1% per trade. The reason why it's recoverable is because it helps you understand that even though I might be down 5 trades, right? 1, 2, 3, 4. 4 trades, okay? 4 trades. If I win 1 trade, okay, and it gives me 150, okay, sorry, 105 pips, guys, I'm going to recuperate those 3 losses across 1 trade. 3 losses across 1 trade. So it's important to understand that your risk to reward is always going to be impeccable if you follow exactly what I'm saying to you. The LWV strategy is bulletproof. Even though we're down, guys, we're not going to cry about it. In actual fact, we're going to be excited. Okay, we are going to be excited. So let's see what happens here. I need to really add another position. Well, I don't need to. I got tapped out. So let's see what happens. Now that I've been tapped out. And remember, guys, I've got tapped out of the trades because I was not playing the whole let's do the SL, move it to break even. I'm going hard or going yard. Okay, that's exactly what I'm doing, right? So now, because price is beneath this zone, we're not going to take any trades beneath the zone. We would need price to do this. We would need price to push back up and then come back down in order for us to buy this, okay? That's what we would need to do, guys. So let's kind of speed this up. Let's see what happens. Price pushes up. Does it close above the zone or is it trying to come down? What are we doing? Okay. Price is pushed up above the zone and it came back down here. So I'm going to add, okay? I'm going to add 1 position so far. And we're going for the same thing, guys. The exact same thing we went for last time, okay? 35 pips SL. 35 pip SL. And then we're going to go for 35 pips TP1, okay? That is going to be the first take profit. I would be adding 3 trades in here, okay? Because 3 trades would, of course, equal TP1, TP2, TP3. And now that we're down, okay, we also want to be a bit more smarter, okay? So we're now saying to ourselves, cool, we are going to actually put ourselves in a position that when we get to a take profit target, we're going to take the profit, okay? 35 pips. Here, 35 pips. Oh, sorry. TP2. Is this TP2? 105. I think I already done TP2. Okay, cool. Let's play it out, see what happens. Okay. Comes close, dances close to the SL. Pushes up. TP1's been hit. Okay. Now, TP1's been hit. Really and truly, I'm going to have a look and see what we see in here, if we see anything. Okay. So I'm going to look for another candle. This is the 1 p.m. candles right here. New York session candles here. So I'm going to mark this candle. If price comes back down, we will be taking more entries, guys. Okay. And why do I say that? Because from where this candle is here, upwards, we've moved more than 40 pips. Okay. Can it come down? Can it come down? Doesn't look like it. Okay. Now, currently we've got $1,200 in profit. We're currently $1,400 in drawdown. Okay, I'm fairly confident TP2 will get hit. So what I'm going to do, just in case price doesn't come back, just in case price doesn't come back, that's 105 pips. We take that off. Protect position. In fact, we're going to leave them on, guys. We're just going to leave them on. Okay, 105. We're going to leave them on. They're probably going to hit them. As I said, it's going to hit them. Okay, so let's hit all those trades. And guess what? When we now have a look at our closed positions, okay, we had 1, 2, 3, 4, 5. We had 5 losing trades. Okay, we had 3 winning trades, guys. And those 3 winning trades gave us a P&L, okay, of $350. So although it's not, the P&L gave us 1,355. Okay, that's the profit that we was able to break through. We started with a 10K account, and now we've managed to have $1,355 of profit. Now, ultimately, with that being said, naturally we're gonna expect the fact that price can always pull back and take more entries, right? So what we're gonna do is we're gonna wait to see where we can find another entry, and we found one right here, because here is another New York session candle right in here. Okay, right in here is a New York session candle. Okay, price has dipped the low. It's really annoying that I can't go back on this. I can't go back, so what I would do is I would add a buy position. For the sake of this recording, I'll add a buy position here. But of course, naturally, we wouldn't do this. So we're going to add a buy position, and we're going to place our SL beneath this candle here. So I'm going to put 60 pips just so that we can pretend that we did get into a trade right inside of this zone here. And we're going to see what price does. Okay, let's speed it up. Okay, price does actually come down. So because price comes down into our zone, we're going to add another trade. And rather than us close the other trade, we're going to hold it open. Okay, we're going to hold it open, and I'm going to risk it all to show you guys how good this strategy is. Whether we lose this trade or not, I've already shown you guys that, hey, we can lose more trades than we win trades, but we're still going to end up profitable. Okay, let's let this trade play out. Let's see what happens. Okay, so it dips inside of the zone, and then what does it start doing? It starts pushing. Okay, it came down here again, which would have meant that we would have had another entry, but notice, guys, it's played into this zone and then it's pushed up. This is what I want you guys to pay attention to. We don't care about the money. The money is fake. This is a backtesting tool. But what's important is that price is playing into these same time zones. These same time zones that I've told you about. Price is playing into them, and then the rest is history, guys. The rest is really and truly history. Now, look, I'm going to pause it currently where we are right now, and I'm going to show you guys down here that we're currently in over $4,000 worth of profit. Okay? Chances are prices could potentially still push higher, but hey, we started off with a 10K account. We're now up 40%. Okay, we're now up 40%. 40%, guys. This is a really big deal for us to understand. I don't understand. Trades just disappeared. What happened there? Let's go back to the hour time frame. Okay, cool. So look, you know, this is hilarious, guys. We started off losing trades. We started off with some trades that wasn't working in our favor. We had some winning trades, some small timed trades, and then we had a couple losses. But we had 4 or 5 losses. If we go back over to the history, we can see here we had more losses than we had wins. We had 5 losses and 3 wins, and we were still able to net a profit. Okay, now we're involved in, I'm not sure why it's not showing us the open positions, but we're involved in 3 trades. Okay, and those 3 trades right now are showing us $5,000, guys. It's showing us 50% of our account balance. Now I'm going to close these trades because it's just continuously going higher and higher and higher. Okay, and in some instances, although that's cool, you know, I would take a lot of profit off the table. So I'm going to close one completely. I'll close this one. It's the highest entry. I'll close this position. This position, I'll close 75% because, I mean, look, from the entry, it's pushed up 200 pips, guys. If you're in the market for more than 200 pips, you're seriously being greedy, okay? Unless you've got a reason. Unless you're holding this position for a lengthy amount of time, which is fine because you've got analysis to support that. Right now, all I'm showing you is that the session strategy, the strategy of this, let me get my words out. Right now, what I'm showing you guys is the simplicity of the strategy, okay? We've only marked out a New York session opening. We've waited for price to move up more than 40 pips, and when it's come back down, we've taken a trade, okay? And in actual fact, if we think about what could have happened in here, price would have moved up 40 pips here. So when it came down over here, we could have taken an entry right here, okay? Now 35 pips would have been here. So you guys can see that we never would have been stopped out. Okay, we would have had one entry here, price pushed up, come back down, a second entry, a third entry here, a fourth entry here, price pushed up, then it came down, and again, because we can see this is the SL down here, we never would have been stopped out. We never would have been stopped out, guys. Price would have came down, reached the 50%. If we measure the 50%, okay, 50% would have been here. So now we also know that we would have had another entry lower, which means more profit with price pushing higher. And guys, look, you've been able to catch over a 5-to-1 R&R. Now, I'm not saying these trades are going to happen all the time. They're not. But for the most part, when they do happen, that's all you need to be in the market for this to happen to you once. If this happens to you once, guys, you're in the money. Now, I'm going to leave one position with the full lot size so we can see its potential. Okay. I'm going to move the stop loss. The stop loss is going to be, can I go minus on this? I can't go minus on this. So I'm going to go break even, okay? Break even at a value of $200, okay? So the stop loss is now going to be above. And if price comes down any lower with this trade, we're going to go auto break even. We're going to go $500, okay? So now that we let the price play out, we're going to see what price does. Price is still climbing, guys. I've already closed over 75%. Price is still climbing. Now, some of you might be saying, well, Vel, this is unrealistic. If I had 5K on the table, I'd take it. Well, the question would be this. If you're caught up in a trade, which is clearly going in a direction, you need to ask yourself, have you caught this trade at the best possible time? Because that might be the question. The question might be that you may have been able to buy at a time where you're at the lowest point where price is going to continue going higher. Now, for those of you who are, you know, experienced in trading, I'm sure you'd understand there's liquidity above, therefore there's reasons for price to keep on going higher. But for those of you completely new to the market, you just need to understand that if you're in a trade and you're now risk-free, then there's no harm in you allowing the trade to ride into the sunset. There's no harm. All you would need to do is, if this blue line represented your stop loss, let me change this blue line so it's easier for you guys to understand what I'm going to say here. Let's change this line to red, okay? If this red line represents your stop loss and the blue lines represent your entry, if price is all the way at the top up here, you can move your stop loss level above your entry. You can move it into profit. This is what we call a stop profit. So I could move my stop profit, for example, as high as here. So as much as the market is going higher and higher and higher, I can also move my stop loss higher to see how far it's really going to go. Now, if we stop here, we can see, guys, that again, we've been able to grow the account in, you know, not a lot of trades here, guys, but we've nearly doubled the account. So if we can just see if we can get over the 20K mark, maybe we can, maybe we can't. I don't think we can. I think we're unfortunate now. I think we should have closed out. Should have closed out. But if it hits that red line, guys, guess what I'm going to do? Close it for sure. Okay? It's coming close. I'm going to close it. Okay? We had 6K on the table. Now we've got 4. I'm going to close it. I'm going to close the rest of this trade. Close. I'm going to close the rest of this trade. Okay. Now that I've closed everything out of the market, guys, we can see that we're up 18K. Okay, we started on 10K, we're up $8,000, 100. That's, 80% here. This is something that we shouldn't just look past and think is a fluke, because we understand what the strategy is, we've practiced it, and now we're putting it into motion. Okay, now the next question you could ask is, well, Cavell, if I've now got out of these trades, when do I get back in? Well, we just do the same thing over and over and over again. Now, for the sake of this recording, guys, I'm not going to mark out all of these session candles above, okay? But that is exactly what we would be doing, okay? And if we have a look, anytime I see price pulling back and turning away from areas, I look straight away to the left to say, is there a session candle in that area? Is that the reason why price turned around? And if we look hard enough inside of this area, it probably 9 times out of 10 is the reason, okay? We find this candle here, 1 p.m. again. If I open the chart up a bit more so it's nice and clean. Okay, we have a 1 p.m. candle. Where's the 8 a.m. candle? 8 a.m. candle's here. Okay, so it's the same length as this one, so I'm not going to draw out the 8 a.m. candle. But what I will do is this 1 p.m. candle here. Okay, if price can come down, then we'll be sure to look at another buy. But look, if we got into a buy from here, price pushed up more than 40 pips, when it comes back down here, we get a bit of success, price comes down. Now, this one's actually a good example, guys, because this zone is definitely wider than 35 pips. The length of this candle here, actually it's just on 35, okay? So we usually this is the reason why having an entry at 50% would be beneficial, because what this is saying to you guys is this: we know that price can move anywhere inside of this zone, right? Anywhere inside, it can even move beneath the zone. So what we need to understand is, if our SL cannot cover the zone at the bare minimum, then the chances are that we run the risk of getting stopped out of a trade before price has even gone anywhere. We get stopped out of a trade for price just consolidating inside of the zone. It hasn't told us, it hasn't confirmed that it's going to go down. It hasn't confirmed it's going to go up. But we don't have enough breathing space to be able to monitor it. And that's okay. Because all it says to you is, when I go back to the start of this video, guys, is I told you that you was going to learn to become more precise. So what you've found is that sometimes you may get into a trade, it might not be the right moment, the right time. It might be the right direction, but it's not the right time. Okay? So if we look at 35 pips from here, and we go here, okay? 35 pips keeps us in the game for one entry. For the one up here, we know it wouldn't have, because we can see down here price closes beneath. Okay? And if we look at what price is doing, okay, price has come down to our entry. I have missed it, which is quite annoying, because I would love to just, well, to be fair, I could enter a position here now. So I'm going to enter a position here. And guess what, guys? This is where the fun part comes into trading, because I now know that I'm up 80% on my account. When I'm taking these trades, I'm not going to increase my risk, but what I am going to do is I'm going to think very carefully about now reducing the risk. Because if I've had such a winning run, I don't need now to be put in a position where I have a losing trade, which then messes up my mindset and I start chasing losses. Let me reduce the risk. I've done all this hard work. I've stayed up hours to mark out the candles, to take the trades, to carefully take myself out of the market, not for me to give it back on the next trade. So I'm going to reduce my risk 0.5 lots, okay? And I'm going to buy. So that if it doesn't work out, nothing. If it doesn't work out, I'm not going to cry about it. If it does work out, then I'm already still in profit. Profit is profit at the end of the day, guys. I'm not going to cry about not putting down enough. I'm not going to be greedy. I'm going to be grateful. Okay? So what happens? Price comes down. Price comes down. Now, having put a 0.5 lot on the table, it makes me feel a lot more easy knowing, hey, good thing I didn't go in heavy there. Good thing I didn't risk it all. Okay? Just because we had a couple of winning trades doesn't mean that we want to get confident and start to, destroy our profits by placing down heavy lot sizes and going harder. We don't need to do that. What I should do is make a withdrawal. That's what I should do. Now, hopefully we've taken 10 trades. Okay, this recording's gone on quite a bit. Really, I wanted to take 10 trades and see how I got on with those 10 trades. Let's do this. Let's go to the journal. Let's see what we can get. Journal's empty. Shouldn't be empty. We've just had trades that we've closed. Okay. Okay, I think this program must be bugging because it's not showing me the closed positions, which we could see before, but we can see the profit is here now. Again, we can see here, look, off of this session candle here, price comes down, it stops us out at first. It does. But then what did I tell you guys? We need to wait for price to close back above the zone to then come back down into the zone. And when it does that, we take the entries and we see price push up. The rest becomes history. Now, I do want to close this and come to an end because this is, I think, is bugging out. I think we're getting into that latter end of the session, guys, where I just want to show you the percentage of what it's done. Okay, so go to next session. Nah, let's just close this. Let's come out of this. Okay, so if we check the analytics, once it loads. Okay, so the analytics are going to show us, of course, just how accurate this is. Now, look, essentially, guys, this says 79%. Okay, now the win rate was 50%. Okay, total trades was 12. This is a really good example because I want you guys to see the truth. I told you guys you're going to have between a 75 or 70 to 95% accuracy. But guess what? With this strategy, guys, you don't need to be 95% accurate. You don't need to be 100% accurate, because even though we can lose more trades than we win, and we can still end up profitable. So I think in this case, we may have lost more trades than we won. Let's have a look. So we can see here, the best win was 30% on a trade, average win 14%, worst loss 4%. Losing trades, the maximum loss you got in your worst trade shouldn't be 4%, but okay. Win rate was 50%. Okay, cool. Total trades, cool. So look, we can see here when we look at the statistics, guys, that when we're losing trades, on Monday we lost, Tuesday we lost 700, but then ended up 3,746. Wednesday, 4,000. Thursday, 2,000. So in a week, we've made just under 10K in a week. This is important for you guys to understand, because when we would approach Friday, I'd be trying to withdraw 70% of my profit to leave the rest in there to then go again for the following week. Okay, it's important for you guys to understand when you reach a target, reward yourself. Take the money out, make a reinvestment, purchase something, do something with the money. Don't just let the money compound if you don't have the mindset to stay disciplined. If you don't have the mindset to stay disciplined, guys, it's really important for you to take the money out of the account and reset your mind to go back to where you were when you first started. When you first started, you was risking 1%. You had 35 pips as a stop loss. Now that you've made an extra 10K, all of a sudden you're Billy Big Bullocks, right? You're trading with no stop loss. So if you withdraw the profits, it can just reset your mind to go back to the basics of what you guys need to achieve. Now we can see here the profit was 80%. You know, it says 79.77%. That's cool. We can accept that. It doesn't really matter. The purpose of this video was to show you guys how accurate this strategy can be and how much money it can make you. Okay? How much money it can make you was the most important part, and also how patient we need to be. If I go back up here and show you guys, here we can see on Monday we lost. We didn't start revenge trading. We didn't jump back into trades. We actually said to ourselves, okay, cool. We need to wait for price to come back down to the next session candle in order for us to get involved, right? These session candles, it may have taken us a week. It may have taken us 2 weeks for price to come back into these candles. In some cases, we saw that it took us a matter of minutes or hours for price to come back. But once we got into those trades and they went in our direction, they really went in our direction. And that is what I want to share with you guys. This strategy is about putting yourself in a position to be in the right place at the right time. It allows you to become more profitable. It also teaches you to be more patient, but it also makes you more precise. the 3Ps in a pod. It gives you those exact 3Ps in a pod, guys, which gives you the ultimate guide to having a strategy that is stress-free. You haven't got to worry about this or that. You haven't got to look into so much different indicators, you know, what's happening on the 5 minute, on the 2 minute, on the 1 minute. You're just looking at the 1 hour time frame. You look at the 1 hour time frame, you mark out the candle. Does price move more or less than 40 pips? If it moves more, ding, 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 game on. If it doesn't move more than 40 pips, then we sit back and we wait. We don't even go onto the charts. We go and enjoy the rest of our day. So, of course, for those of you who've got this far in the video, well done. This strategy was once, I'd say a safe spot in my trading arsenal. I say safe spot because I've learned many different strategies, of course, which, as you know, if we're looking at this strategy alone, guys, we've clearly seen just now that we don't get a lot of trades because price does, of course, take time to come back to these areas. So luckily, I've been fortunate enough to have multiple strategies, but this one was really a strategy that never failed me, guys. It never failed me. It made me over 6 figures. This strategy can easily help you pass your prop firm account. This strategy most people don't know about. Most people will not understand the significance of a session candle. And if they do understand the significance, they're probably looking at every session candle. They're looking at the New York, the London, the Sydney, the Australian, because they're greedy. They want to look at getting trading opportunities. For me, I'm saying, hey, if I just block out the noise, take away 2 of the other sessions and just look at 2 sessions. It's only the pair you're trading only has 2 different currencies. Okay, so let me look at those specific currencies trading session open and try to understand how price is moving around those. And if I can understand that, hey, I might have to be more patient, but I will also be more profitable. Guys, I've been your host. You've been learning with Vel today. I appreciate you guys for taking the strategy. Be sure, of course, to follow the next steps. If you guys, however you guys have got here, it's only the beginning, and I hope I see you guys soon on the other side. Always remember that every day is money day. Peace.